Howdy, ladies and gentlemen. This is another video diving into the history of my investing. We're going back to 2017, but this one I held on to all the way through to 2019. So let's see what I learned from this one. We're talking about stocks. We're talking about what I've learned, what I know and how I know, and basically I'm gonna get you to a point of where I am now and how I got to where I am. But I don't want to just tell you how much I have in stocks now. I don't want to just tell you how I'm doing what I'm doing right now without letting you know what I went through to get to where I am. So it's gonna be a trickling in. Just before this one video, I put out another video on San Juan Royalty Trust. I messed up. I didn't look it up properly. I kept saying San Juan Realty Trust, so that wasn't correct. But anyway, let's get into today's videos. Guys, real quick up front, like, comment, subscribe. I promise this is going to be worth your time. I'm going to go over a lot of numbers. I'm going to go quick, but I'm going to round it up at the end. I'm going to give you some really good stuff at the end, letting you know what to look for, how to look for it, what happened to me, how I know what to look for going into the future. If you want to know what you can do with a very small account, $100, $200, $300, $400, this is going to be gold, literally gold. You can't get better information than this, especially because you're going to be able to go look at this stock now and see where it's at right now. All right, let's begin. So the stock symbol we're talking about today is PHK, Pimco High Yield Income Fund. This is also one of those companies where it had a monthly dividend. That's what drew me to it. I also liked the price per share. That was also something that drew me in. So in 2017, when I started buying this, I was skittish. I wasn't confident. I didn't know what I was doing. I was basically buying and selling a stock in a couple of days once I made a couple cents profit. That's not the way it works. So my first purchase was June 19, 2017. I bought 2 shares. It was $17.34, $8.67 a share. And then I sold it July 11th for $17.56. I guess I missed out on the dividend and I was unhappy. I sold it. I made like a 1.2% or 1.3% profit. It's garbage, it's junk. And then I collected my brains. I looked at the stock, I looked at the history again. And then I bought some more at September 12th, 2017. Bought 3 shares, $25.05. I lowered my cost basis down to $8.35 a share. Yeah. So the first one was $8.67 and then $8.78, and then I came down to $8.35. So I looked for a better opportunity to get in. Moving forward, now we're in October. I made 2 purchases. I made a purchase for $8.03 and then $7.63. I wasn't putting in a whole lot of money into the stock market. It was just a little bit at a time. I think I was doing maybe $50 twice a month, so $100 a month altogether. So just a little bit at a time, just getting myself in there. And then, November 1st, 2017, I got my first dividend. It was for 24 cents. I believe that was on 3 shares. And then I made another purchase because I was happy. November 14th, $21.99. I bought the shares at $7.33 each. Much better cost basis than my $8 and $7.63. So I'm averaging down. I'm forcing my price, cost, and average to go down. We are looking at November 15, 2017. I bought 2 more shares at $14.60. Again, at a lower price, $7.30. See, once you've got your foot in the door, you can monitor the stock and you can see it dipping. And when you see the dips, you take your shots, you buy it. it's still a steady stock. It wasn't going like Tesla, bouncing super high, super low. No, it's a steady stock and it's paying you dividends. So it's worth your time to just check it out and buy those little dips. Let's see, we're going into December. I got my dividend again, 40 cents, again 8 cents a share. I had 5 stocks at the time when the dividend was calculated. December 18th, I bought one more at 7.39. Lifted the cost average just a little bit, but I'm still buying it in the 7.30s. Way better than buying it in the 8s. Moving forward, I had a little bit of a slow period. January 2018, I got my 81 cent dividend. February 89 cent. March 89 cent. April 89 cent. May, June, July 89, 89, 89. August 89 cents. I did not buy any of the stock. I was, I guess, buying something else. But that's not the way you're supposed to look at your portfolio and your stocks. Look at every individual stock and determine whether it's doing good for you or not. You can't compare it to something else. At this point in time, I believed I was in a position that was giving me good returns. So here's what I did. I went ahead and I bought in August of 2018. I bought one more share. Now I'm at $8.87. Way over my $7.30-ish cost basis. It's totally up there now. September 4th, I received another dividend of 89 cents. We're moving forward. September 18, bought another share for $8.65. September 21, I bought another share for $8. I guess in the meantime, while I was looking at the stock, it wasn't dipping back into the 7s. So I guess I was trying to get that done, trying to add, but it wasn't dipping. So I'm like, okay, you know what? Bite the bullet, buy some more. You're going to get those dividends. Why are you holding yourself back? Let's go into October 1st. Got my 97 cent dividend. Again, I had a little bit of a quiet streak. Let's see, December 1st, $1.13. October 31st, $1.13. So October 31st was for November, but nothing for November. January, February, March, April, $1.13 in dividends every single time. Now this is what's fantastic. This is the key parts here that are very important. Coming into March of 2019, so you've been seeing how I'm looking at the stock price up and down, little bit. I've seen this stock in the $7. I've seen this stock in $8. In the end of March 2019, I saw this stock go all the way up to $9. I had a sick feeling, but I ignored it. I'm like, so what? The stock is just doing good. It's up to $9. I'm not gonna buy right now, but as long as they keep paying their 8 cent dividend, we're gonna be good. So what happened was they ended up announcing right there in March that the dividend's gonna be cut from 8 cents to 6 cents. Yeah. How do you think I felt? The stock price plummeted. It was horrible. It was horrific. I felt so bad. I'm like, all of the dividends I got are gone. It's completely wiped out. April 4th, I sold my shares. I sold 5 shares, $38.50. April 4th, I sold another shares at $39. Cost basis $7.70, $7.80, and then April 5th, I sold remaining shares that I had, $32, $8 a share. I'm completely out of the stock. So let's see, who is Pimco? Why was I even there? How did I find them? What was the attraction here? Lessons learned. I found out what a dividend trap is. You read about it, you don't know what it is, and then you get into it and you find out, hey, there's a dividend trap. It was offering such great dividends that you couldn't resist to just be there. It was offering like 10-12%. I was thinking, okay, as long as it's paying an 8-cent dividend and the stock is under $8 a share, that's a pretty good return. That's like 1% a month. So on an annual basis, that's 12%. That's great. That's excellent. That's what I was achieving, and I was very happy. And then when they cut the dividend, I saw that stock plummet down to the sixes. And I'm like, oh no, I'm never going to be able to get my money back out. At 6 cents a share, I have to get dividends forever to make up that difference. It wasn't going to be worth it. Guys, help me out. If I'm umming or hesitating or taking too many pauses too long, call me out on this. Make it clear that, hey, you said you were going to make improvements and you're still stuttering and umming too much. So that I know that this is still happening and I can improve it. Let's go over to overall investment and see what I did. I'm gonna stop putting my hand on my chin. I've noticed that too. That's kind of annoying, I guess. I put a total buying was $112.77. Total sales, no dividends included, just a stock, because I bought so much in the $7 region, was $143.38. I had a 27% gain on just the shares because I was buying it for such a long time, and when I initially bought, I was smart and I bought them low. When we look at I'm sorry, my bad. 143 is with the dividends. 127 is without the dividends. I had $16.32 with dividends. So 143 is my total gains, and I put 112 in it altogether. So 27% is my total return, and my just return on sales and purchases, profit and loss, is 12.6%. So yeah, I ended up making good on that stock, but currently the stock price is $5.47. Again, I'm happy that I'm out of it. Pimco High Yield Fund, I never told you guys what it was. Pimco is a California-based company. They do a lot of, I guess, bonds. They do municipal bonds, city bonds, state bonds, whatever. They're California bond stocks, whatever is a high yield. Of course, the high yield also has some corporate bonds in there. I know I looked at the prospectus when I was in there. I haven't gone back to check it again. It's not relevant to me right now. I'm not going to be going back into Pimco as long as I'm aware of how this company's been performing and what it's done for me in the past and what I expect it to do in the future. This is a closed-ended fund. When you look at it in Robinhood, this is the gold nuggets right here. It's not going to show you a correct dividend. It's not going to show you that it pays monthly. Robinhood doesn't have any of this information correct. It's all poor quality information on Robinhood. So again, this is me discovering how Robinhood works. It's me discovering that you have to look outside of Robinhood to find your opportunities, to find your stocks. One of my favorite places to visit is Finviz, FINVIZ.com. They are one of the best websites. They have good screeners. Check them out. Do some research on your stocks. Basically, between San Juan Royalty Trust and PHK, they were both under $10 stocks, and they were both paying out pretty good dividends, and they're both collapsed in value. So what are we learning? We're learning basically anytime a stock is under $10, there's a good chance that it might be on its way down even further. We're learning that check the long-term history, check how the market feels about that stock. Are they showing growth signs? I was an idiot. I don't want you to be an idiot. I want you to learn from my mistakes. My mistakes are I was greedy for the dividend and I didn't factor the losses that I could have when the stock price plummets. when I sold out of PHK, right after that, I saw that the stock price was already trending down, and then I knew that I was very lucky to get the price that I got on my exit. And also, if you notice, I staggered my exit. So I sold 5 shares at 770, I sold 5 shares at 780, and I sold my last 4 shares at $8. So I didn't know if it was going to hit the $8, but I knew that I wanted to at least lock in the $7.70 price and the $7.80 price. And if I got the $8 price, that was good. So that's how you actually successfully exit a position. You always look for a lower price than your initial price when you purchased, and you always exit a little bit at a time, like 3, 4, 5 moves at a time, to lock in higher prices. You're not greedy on your exit to try to get a lump sum, because that way you might lose out on some more gains, or you might lose out, or you might miss the top and you might end up tumbling all the way down. So you don't want to be greedy on the buying or on the selling. I'm glad I learned this in 2017. I'm glad I got my dividends in 2018. I'm glad I held the stock, actually. I'm happy with this stock. It's just not something that I'm going to be going back into. I'm looking for higher quality companies. PHK has shown me what a closed-ended fund is. PHK has shown me what a bad closed-ended fund is. Pimco is a company. They have a lot of different stocks in there. Let me give you a little bit more of a bonus. I know this video is going on to 20 minutes now, but let me also talk to you about Calamos. I'm not even sure if I said that right. CHI. That is a very similar high income fund. I sold Calamos, CHI, based on what happened to PHK, and I'm looking at Calamos right now. The stock is roughly safe. It's in the same price where I bought and sold at. I had much better returns because they didn't announce a change in the dividend. But I assumed Calamos and PHK were going to be the same. So I just sold out of that one as well at the same time. And honestly, this is where my learning came to an abrupt end. Not an end, but I graduated to a next level. I'm like, okay, no more no more poor quality companies, no more poor quality stocks. Just go for the good stuff. Go for stocks that are higher priced, that are maintaining their price. When you're looking to buy a stock, look at the 1 year, look at the 1 month, look at the 1 week. When you look at the 1 week, you can figure out what price to get in at. When you look at the 1 month, you can see what kind of a recent trend it has. When you look at the 1 year, you're seeing the long-term trajectory. When you look at the 5 year, that's just historical information. But you're also seeing a trajectory. You're seeing, okay, did this fall down? Are they climbing up? What are they doing? I learned so much from PHK, but that wasn't all of my learning. I'm going to dig up another example to show you another stock that I had that taught me a lot of lessons. That's helped me figure out how to do my investing now. And I hope you're subscribed so that you can get the details of my journey and find out what to do and what not to do for yourself on your own, and improve your own investing strategies and outcomes going forward. Like, comment, subscribe. I don't know, I don't want to say smash the thumbs up, but if that helps, please do it. I don't know. I'm trying to grow here. Help me out. I'm way under 1,000 subscribers. I've got, I think, like 33 as of this afternoon. Thanks, guys, for subscribing, for anyone who subscribed. Thanks, guys, for watching. Thanks, guys, for following up. I really appreciate it. I have a few videos. I've got them on a schedule. I'm trying to see how that works. It was just basically me using the camcorder to record my screen right here. I don't know if those are doing any good. I have a spreadsheet here that I can publish. Let me know if you want the spreadsheet. I can email it to you. I can send it to you. I can just put it right there on the. It's a Google Drive doc, so I can make that shareable. I don't care if you look at the information. I don't care if you see my history and my purchases and my sells. It's very straightforward. It's very simple. It's very small numbers. My stock portfolio right now is over $200,000, and I've only put in from my own pocket roughly maybe $15,000 or $16,000. Yeah, so from 2017 to now, that's grown significantly, I believe. So if you want to know what happened, how it happened, I suggest you hang on in here. I believe I'm delivering the most value here at the end of the video. I hope you stuck around to get to this part, and you did. I promise I'm going to reward you. I'm going to reward you like you have no idea. Anyway, see you guys. Bye.